Okay, so this is just part two of our scalping session, and we're going to continue on with exits here. So if you don't have any resistance levels that are present in the area that you're going to scalp, so if you're scalping around this area here and there's not any resistance levels until way up here, then there's a few different things you can do. You know, if you have an organic resistance level in there, like $35, you know, you can look to either dump it then, unless it just blows through that $35 level with heavy volume. You know, maybe you hang on to it, or maybe you take a little bit of profit. You know, on most of my day trades, I'm taking profit increments. I'm scaling out 25%. Well, a lot of my scalps, I'll scale out my first one at 50%, okay? Because riskier trade, right? So I'm going to take more profit, put it in my pocket right off the bat. And then if everything is still looking good, the trade still looks strong, I still like the trade, then maybe at the next resistance level, if it's having trouble breaking it, maybe I'll take another 25%, right? And then I'll let the last 25% kind of ride a little bit. Just kind of like a lottery play, okay? But if the trade's not looking good, then I'll just dump the other 50%, okay? So you can absolutely scale out on scalps, right? So more exits. You can actually set a bracket order, okay? And why would you want to do a bracket order? Well, there's a few different reasons that I think bracket orders can be pretty beneficial in scalps. So scalps are typically, you know, keep in mind you're in a trade where gasoline has been poured on the fire, right? So it's probably pretty volatile, okay? It's pretty much going crazy. You don't want to be in a choppy scalp, but you're probably you're going to be in a volatile scalp, right? So, you know, what you're looking to do there is you can set a bracket order. So what does that do for you? Well, it takes all the emotion out of the trade, because it's already a done deal. All you have to do is set it and forget it, like that Ronco guy used to say. So you just set your bracket order at whatever, you know, you thought it was going to do, you know, making sure that your stop loss is at a key support, or it's at where your risk management plan is, and making sure that you're taking profit at those key levels. Maybe you're taking profit just below the next resistance level. So let's say you set a bracket order for, you know, a 15-cent stop loss and a 30-cent profit take, right? So you can set it and forget it. It's a done deal. There's no emotion in the trade. Just don't change it, right? So hopefully you're going to make that 30 cents. And if it goes on up and makes another 50 cents on top of what you made, 30 cents, well, that's okay, right? Because when we're scalping, we don't care what happens after we take our profit. Our goal is to get in and out quickly, grab some quick profit, and if it continues on up, that's fine, because guess what? You can always take another scalp, right? If it breaks that next resistance level, well, maybe you grab another scalp on it. There's been many times where I didn't take a day trade, but I'm scalping something, you know, all the way up, right? Every time I see an entry signal, and then I'm just taking another scalp. So don't be afraid to grab those profits out of there. But bracket orders can be very helpful, like I said, because they take the emotion out of the trade, and you can set it and forget it's done deal. You can even set it and forget it and go look at another stock, right? That's fine, because you're already set up. Obviously, you can't do that in pre-market, but during normal hours, you can certainly do that. So we talked about exiting when you're seeing volume starting to taper. And one of the reasons that we do that is because that is where you're starting to get into knife territory. You know, a couple of different things you want to look at for knife territory is the stock tired? You know, has it been running for most of the morning or most of the day? And, you know, maybe people are just starting to look at taking profits at that point. So keep that in mind. You can also look at once the volume starts to taper, and once these candles start getting flatter, okay, like this candle here is pretty flat. You know, you're starting to get doji. See, you know, we had all these big candles up here, and then we start getting these small candles, right? See these small candles? And then look at the corresponding volume down there with those small candles. Would you want to hold that trade? No way, right? Because look what happened right after that. It's a classic example of when these when these candles are getting smaller bodied and volume is tapering, boom, right? So this is why I exit out of those trades. Even if this thing had gone back up and hit, you know, made a new 52-week high up here, that's okay, because most of the time it's not going to do that. Most of the time it's going to do that, right? So that's when you're looking to hop out. Don't stay in a trade hoping that it's going to go back up and volume's tapered and now volume's flat, and the candles are getting flat as well, because that is total knife territory. Okay, so keep that in mind. And we talked about, maybe your exit strategy is just getting, exiting at the beginning of the first pullback, right? And there's nothing wrong with that at all. You hop in this green candle, maybe you hopped in above this resistance level here, and it just keeps trucking on up. And as soon as you start seeing this red candle form, boom, you're out. There's nothing wrong with that at all. Even if this thing came back down and bounced off of this support level and came back up, yeah, you left some money on the table, but that's okay, because guess what? When it came down here and bounced off of this support level and started coming back up, if it had heavy volume and started forming a nice quick green candle booming on up, you can take another scalp. No big deal. Take those profits. Okay, so but keep in mind that if we already talked about that. So we talked about once we're green, that if you like, you can stay green. You can ride the trade out if you want to, but just keep in mind, scalping is not about riding. It's not about riding the trade out. It's about grabbing those quick profits. And if you're up 6 cents and then boom, you start seeing some nasty sell volume coming in, don't be afraid to just hop out of the trade and you made 2 cents. That's okay. There's nothing wrong with that, because you didn't lose money. You made a little bit of money, and there's going to be more trades for you to take throughout the rest of the trading day. Okay, let's talk a little bit about position size. All right, so I told you that some of these scalpers, I don't recommend this and I don't do this, but some of these scalpers, simply because they are only looking for smaller moves, they're actually going heavier in their trades, in the amount of shares that they buy. Instead of buying 1,000 shares, they're buying 5,000 shares or 10,000 shares. I mean, if you want to do that, that's cool, but just make sure that it fits within your risk management plan. Make sure that you're not increasing your percentage that you're willing to risk on each trade, because keeping in mind, scalps are more risky than day trades. Okay, they can be, right? So this really just kind of goes down to what your risk tolerance is. If you're taking a trade that's just above this resistance level, and you broke through it with heavy volume, and you would put your stop loss just below that resistance level, and that allows you to buy a lot more shares than normal, then yeah, that's okay, as long as it fits within your risk management plan. But I wouldn't go and going heavier in these trades and risking a whole lot more than you normally do percentage wise that doesn't fit in your risk management plan, just because it's a scalp, just because you're only going to make 10 cents or 15 cents or 50 cents or whatever you're looking to make on the trade. I wouldn't alter your risk management plan based around that, because you can take multiple scalps in a day, and they really do add up. They really do. A lot of people think even if you're making $200, well, you do 5 scalps in a day, which is pretty easy to do on most days. I mean, that's $1,000, and that's a couple $100,000 a year. So, but I personally don't do that. But there are scalpers that do. Okay, so what are some of the things that we don't want to do when we're scalping? So we don't want to scalp stocks that have a large spread, right? Where the bid is $3 and the ask, is $2.70, right? Well, every penny counts when you're scalping. So when you're scalping, you need liquidity. And why are you scalping something that has a big spread anyway? Because most of the time when you have big spreads, it's because you don't have a lot of volume, right? So you don't want to be scalping things that don't have a lot of volume. You would rather be, if you're going to trade those at all for whatever reason, I don't suggest trading things that have low volume. But if you're going to, then you're likely just going to be taking more of a day trade on it. You're looking for more of a longer term hold on those ones that have slower, steadier volume. So don't scalp stocks that have a large spread, and don't hold and hope. Right? What we talked about before. Okay, well, I took this trade here and I set my stop loss here. So, and it came back down here, and it was going to hit my stop loss, but I thought it was going to go back up, right? So I went and canceled my stop loss, and I'm going to hold it and hope that it goes back up. Don't do that, especially on a scalp. Your intention is to get in quick, and you also want to get out quick if the trade goes against you. Because what did you just do? If you hold and hope, well, you just converted that from a scalp to a day trade, or you broke your trading rules or whatever else. So don't get caught up in holding and hoping. Scalping is quick, quick, quick. Get in, get out. Don't hold and hope, okay? And you never, ever, ever, ever average down on a scalp. It's just one of those trades you just don't want to average down on, right? If it's going against you, just get out. Don't average down on a scalp, okay? I don't like averaging down unless that was my initial intention in the first place, okay? And the riskier a scalp is, I might even take a scalp with a smaller share amount than I would normally do. Instead of taking a full position, and I'll take 25% of that position or 50% based on the risk factor of that particular scalp. Am I looking at it at open? So I'm a little bit more worried that it's going to be that more volatile. So maybe I don't go full position on it. Maybe I go 25%. Because, keep in mind, you can always add a little bit more if everything's going your way. But I wouldn't average down on a scalp. And then with scalping, it's very easy because they're so fast. You can get in and out so quickly. It's very easy to overtrade. So be sure and be on the lookout for that. Don't overtrade. Don't take 4 scalps, within 10 minutes and you made $4,000. So you're like, man, this is so awesome. And now by the time you in the day, you've done 162 trades or something crazy. So be careful with overtrading when you're scalping, because it's easy to do. Because some day trades we may only take 2 or 3 or maybe 5 at the most some days on day trades. But with scalping, man, you can take a lot more than that. So just be careful with overtrading on that. So when can we convert an intended scalp to more of a day trade like scenario, right? Basically, we're deviating from our initial scalp intention. And I do this sometimes. So when could we do that? Okay, so I'll give you an example right here. So let's say that I entered a scalp for whatever reason here, okay? And then volume just increased significantly, all right? And let's say I was looking to get out here at this resistance level, okay? But it just, because of the volume and the momentum, it just blew right through that resistance level, no problem. And now I have a big buffer, okay? So let's say now I have like a 70-cent buffer. Well, guess what? I just converted that to a regular day trade because now I have a buffer, right? So if I want to, I can go ahead and I can take some profit there. I can take some profit at that resistance level where my original intention was. But because it blew through there so hard and with so much momentum and energy because of the volume, then I'm thinking, well, hey, this thing might have a lot more in it than what I initially thought. So sometimes I will convert my scalps into a normal day trade or a longer term scalp, however you want to look at it, okay? But like I said, I only do that when it just blows right up through, and sometimes that'll happen. You'll grab the scalp and man, it'll just truck up and be up $1 before you can blink your eye. And then at that point, you've got a buffer. Throw in a stop loss, 50 cents above your buffer, wherever you're comfortable, and then start taking profits from there. So I will convert those sometimes. So, and we talked about, is it okay to scale out of a scalp? Absolutely, for sure. And we just talked about a scenario when you might want to do that, That's totally up to you and totally up to your trading plan. There's nothing wrong with just hopping in and hopping out totally. Nothing wrong with that on a scalp. But you also can scale out when the trade dictates that, right? So, what are some scalping skills and tools that we may need, right? Because scalping is a very different strategy than day trading or swing trading. So, we've talked about this before, and I want to reiterate that hotkeys are very essential when you're scalping, because you want to be able to get in and out as quickly as you possibly can. Because if the trade starts going against you, man, time is of the essence, right? Especially if you have, 5,000 or 10,000 shares, you can start losing money really, really quickly. So the ability to make those trade executions as quickly as possible is vital. So if if your platform doesn't offer the ability to have hotkeys, then I would suggest, if you want to get into the realm of scalping, I would suggest buying one of those external devices, and they're not expensive. They're like less than $100, and it's just a little external device that plugs into a USB, and it has a whole bunch of keys on it, and you can set those keys to kind of whatever you want to. Platforms like Thinkorswim, they have the ability where you can do an auto send. I don't do that because there's too many times I'm clicking around and I'll actually accidentally click the ask and boom, it sends an order. So I use shift to click, okay? And if anybody doesn't know how to get to that or how to set that up on the Thinkorswim, send me a private message and I'll be happy to show you how to do that. It's pretty simple. It's really nice, and it doesn't, you don't have as many accidental oopsies versus when you click that auto send and then the cat just walks across your keyboard and just bought 10,000 shares of some stock that's knifing. So hotkeys, very, very, very essential for scalping. You also want to have a pretty reliable, fast internet too, because that's going to make your executions happen faster and everything faster. You want to have a good platform that can give you those good executions, right? You don't want to have a platform where it takes 5 seconds to fill your execution, to fill your order, or fill it whether you're buying or selling, because they could fill it late or whatever, and now you bought in much higher than you had originally anticipated. And then you want to make sure that your computer can handle everything, that it's not laggy. Everything with scalping just needs to be fast. Think of it. I think we talked about it on Friday or Thursday. We talked about like fighter pilots would be a pretty good day trader, because they have all of these abilities. They can make fast decisions under duress, and they have good hand-eye coordination. So think of it like that. Make sure that you can have that fighter pilot type mentality and speed with all of your tools before you get into the realm of scalping. And if you want to, during the day when I'm scalping and you want to take those scalps with me, hey, and you're not comfortable yet, hop over to your paper trade account, man, and take some scalps with me. And that way you're not learning with real money and flushing a bunch of money down the toilet. Take those scalps with me and make sure that you can execute them quickly like I'm doing, because if I buy at 561 and say, hey, I just took a scalp on so and so, I bought at 561, and as soon as you can buy, it's already 593. Well, you may second guess on taking that scalp, right? So, maybe that's not the level where it was a, good entry. So you can do it with paper trading, follow along with me on paper trading. It doesn't hurt a bit to do that. And, something I forgot to mention on risk management that I thought of later. It's so funny. I'll be laying in bed going over some of this stuff in my head. Oh, man, I should have said this, or I should have mentioned that. So nerdy like that. So one of the things that I forgot to mention is if you set a rule for yourself that, if you lose X amount of money per day or X amount of trades per day, if you have a rule for yourself that says, hey, okay, that's it, I'm done for the day. Or if your rule is the opposite, hey, if I make $3,000, if I'm up $3,000 for the day, then that's it. I'm going to stop. That way I can book those profits. Well, that doesn't mean that you have to stop trading and you're going to be bored for the rest of the day because you don't have anything else to do. So if you want to continue trading, to continue your growing your knowledge base, hop over into your paper trade account. Follow your rules, but you can still trade in your paper trade account, right? So that's something I forgot to mention on our risk management that I wanted to mention to you guys today. Okay, and so we talked about fast decision-making skills, good hand-eye coordination, and basically if you're lacking in any of these areas, what can you do? If you still want to scalp, but you're like, Doc, I live in the freaking mountains, and they have crap internet up here, well, that's when your bracket orders will come in handy, right? So you know that this stock has a resistance level at 36.47, right? So you go ahead and you enter a bracket order for 36.51, let's say, because you want to get above that, you want to break that 36.50 level. So you put in a bracket order at 36.51, and then your stop loss is down here below the support, say maybe at 36.25 or whatever, or 24. You can set that bracket order up, and then you don't have to worry about how fast everything is and how fast you are at making those executions with your fingers and everything. So that's another scenario where bracket orders could really come in handy. So, okay, I think, let me see what kind of time we're looking at here, 20 minutes. Okay, so let me look at some questions. That's pretty much what I wanted to cover today. And we're sitting at an hour, 6 minutes, so I did a good job there. Okay, so make sure, you guys, if y'all have any questions, now is going to be the time for questions. I'm just going to kind of read through here. So Chris had a question. Doc, do you have any options on using the Hull MA instead of the EMA? I don't know. I don't even know if Thinkorswim offers it, but I don't use it. I use the EMA. So most people are going to use the SMA or the EMA, and most of your SMA traders are going to be your swing traders, excuse me, and your longer term hold traders, when they're looking to take a position. What I like about the EMAs better is they take more into account recent price action. So that's what I like about them better. So I'm looking for what's been going on lately. I don't care, what something did necessarily 2 weeks ago. I mean, I might care a little bit, but I'm going to care more about what it did yesterday and the day before. So it's going to take more into consideration, which is why I like the exponentials better. But that doesn't mean that that's the that's the golden chariot, right? If SMAs work better for you, then go with those. Or a different kind of moving average works better for you, and you like them better. I know one of the guys in the group really likes trading with AVR. If you want to do that, hey, whatever works for you, man. What works for one person is not always going to work for the next person. Now, I know I've said that many times, but I really want to make sure everybody understands that, because I have a lot of people that say, well, hey man, Doc, you seem like you're a pretty decent trader, and it seems like you're green most times. I just want to do what you do. Well, that doesn't always mean that it's going to work, for everybody, what I do. And even though I feel like I'm pretty comfortable with my trading skill level, if I were to try somebody else's scenario, man, I might botch it up big time, because that's not what I'm used to. If all I was doing was momentum trading, I'm not sure what my P&L would look like at the end of the month. So I stick with what works for me, and that's what I suggest that you guys too. Okay, so Anka has a question. Chris, I hope that answered your question, man. And if it didn't, please reiterate what you were looking for, and I'll be happy to address it. So Anka has a question. Doc, do you recommend buy the bid, sell the ask? So it just depends. Let me show you what I do here most of the time. Let me pull up my ladder. Okay, so you'll see the buttons I have here. So you can go into your settings right here. There's a little gear box or gear wheel here, right? So you can click that, and you can add different buttons up here. Okay, so these are the buttons that I have for myself. All right, so you can change those up to put whatever you want in there. So I'll go over what the differences are, a few of them. So it just depends on what's going on. Sometimes I will shift click just where I want to buy right here on the ladder. Okay, so if I were to shift click this right here, it would buy whatever, 100, whatever I have it on, 1,000, 2,000, whatever shares at that level. Okay, and if I want to sell, then I'll just shift click wherever I want to sell. And if I bought a stock and I didn't do a bracket order, and let's say I bought it at 28.50 and now it's trading at 28.72 and I'm in the green, then I'll come down here maybe at 28.51, 52, 53, and boom, I'll put in my stop loss there by just shift clicking. Sometimes I'll shift click join the bid. And what does that mean? All that means is that you're joining where other buyers are, right? The highest price that other buyers are, other people where they have so basically you're joining the highest bid. Okay, so somebody's looking to buy 100 shares here at 28.50, right? So if I were to click join the bid, you can see right there it shows I'm going to buy 2,000 shares at 28.50, right? If I sell, or if I join the ask, that means I'm looking to sell that many shares where the highest or the lowest price, I guess, is for the ask, right? So I watch, it'll show sell at 28.55 when I hover over this. Or see, sell at 28.55. So those are cheaper than buying the ask and buying the bids and buy the market, because there's a lot of times that those will let's say that, so this is you're going to join the bid here. But if you were to buy the ask, you're going to buy at 28.55. So if you join the bid, you're at 28.50. If you buy the ask, you're going to be at 28.55. I hope that makes sense. So if you look at buy the ask, look, so if I'm going to buy here, buy the ask, then I'm buying 28.55. If I'm going to join the bid, I'm at 28.50. Now, what's the difference between those two? Why would you want to buy the ask instead of join the bid? Well, if you know for a fact, well, you never know for a fact, but if you're pretty darn confident that this price is going to move up for whatever reason, okay, and you want your shares right now, then yes, you can go ahead and buy the ask. Because what's going to happen when you join the bid is it's a first come, first serve basis, right? So let's say instead of a 1 here, 100 shares, this said like 300. And you're like, man, so when you get in, those 30,000 shares have to get filled first before your shares get filled. So what can happen is if you join the bid, then those shares get filled, and by the time, let's say they're halfway filled, well, now the price is at 28.54, and you'll never get filled down here, if that makes sense. So if you're pretty darn sure that the price is going to go up, and maybe you're only a penny or 2 pennies above where the bid is, then yeah, you can go ahead and buy the ask, sure. Just keep in mind that it's typically going to be a higher price than when you're joining the bid. Same thing with sell the ask. So that's why you see I have buy market, but I don't have a sell market. So why don't I have a sell market? Well, I have a buy market because let's say that a stock halts for news, right? And it's FDA approval, and it's been a highly anticipated FDA approval, and I'm pretty darn sure it's just going to rocket up, right? So instead of just putting a limit order maybe way up here at $29 or whatever, as soon as it pops up, I'll just hit buy market. But I would say that I do that maybe once every couple of months. It doesn't happen very often. So most of the time I'm shift clicking on the ladder is where I do the majority of my buying. And then sometimes I'll do join the bid. But so it's situational, you know. So those are the ones that I would focus on. Okay, so next question. Anka, I hope that answered your question, buddy. Next question, Skibberdoodle. Doc, I have Fidelity Active Trader Pro, so I'm not familiar with Thinkorswim. Can you show me on the chart what sign is VWAP? Yeah, so my VWAP, I'm sorry, is the purple dotted line is my VWAP. And you can see that up here. You can see where it shows VWAP up there, and it's purple. See up there where it's right below my cursor here? That purple's VWAP, and you can see that the orange line is my 200 EMA. So VWAP is just that purple dotted line. And you can make yours whatever color you want. I just, have kept mine the same color for so long. That way I know as soon as I look at it, I know which line it is right off the bat. And I just threw these two indicators on here because I wanted to show you guys a VWAP break. I'm typically trading with this, wrong button. I'm typically trading with this, load study set. This is what I'm normally trading with. So I normally have my 9 EMA, which is the blue line, my 20 EMA, which is the yellow line. This is a 50 EMA, and I do that 50 as a dotted just so that I know it's in the middle. VWAP, that one's 100 EMA, and that's a 200 EMA. So typically during the day, that's what I'm trading with. And I'm not necessarily, looking at these as, they're gospel, right? They're just another area to possibly focus on where you could possibly see a price direction change. Because why is that possible? Because that's what other traders are looking at. These other traders are not using these funky secret make you a millionaire overnight, super secret indicators. These super secret indicators, if nobody's using them, then there's not going to be any price action off of them most likely. So I'm trying to use the same thing that most other traders are looking at. VWAP probably being the the biggest. Yeah, maybe it looks pink, but it's this one here. It's this purple line here is VWAP. Okay, so let's see here. So Sam says, I have 2 questions. I thought getting in on a green candle was a no-no, chasing. How do you make sure you're not chasing a stock? Also, how do you make the decision when to use, join, or buy, sell, ask? So Your first question, Sam, is keep in mind when you're scalping, that's kind of what you're doing. You are chasing a little bit. When you're chasing in its truest form is when you're trying to day trade a stock that's gone crazy. But when you're scalping a momentum candle, that's a little different, right? So sometimes that's okay. Just depends on what your risk tolerance is. Like I said, when you're scalping, you're buying high already. It's already high, right? That's why you're scalping. That's why you're not taking a day trade on it, because with day trades, you're buying low and selling high. With scalps, you're buying high and selling higher, okay? Which is basically what momentum traders do. They're regular trades. That's what they're doing. They're buying high and selling higher. I don't like to do that, so I'll just scalp them. You can look at it as chasing it, in a sense, it kind of is, but you're chasing it with a scalp at the appropriate time. That's why it's very, very important that you're taking these scalps at the right time. You're not taking it, hopefully, when it's getting ready to pull back. You don't want to necessarily get in at the top of that big green candle. When you see a candle that's this size, right? Likely you're not going to see much more. What big green candles look like. You don't typically see one twice that size, right? So once it's already pretty darn big, then maybe you missed that particular move, right? So I hope that answered your question, Sam. Since we are somewhat chasing a little bit with these scalps, we're buying high, looking to sell higher. That's why we're just looking for a scalp. That's why we're looking to get in and out quickly. With that big volume surge, that big momentum going up. Okay, so your second question, Sam, also how do you make the decision when to use join? So it just depends. If I hop over really quick and the ladder's moving crazy and I'm not able to ascertain where I need to click to get on, because sometimes this ladder's moving so fast that it's really difficult to ascertain where you can get in, right? So sometimes at that point, I'll join the bid where everybody else is trying to get in, right? And I'll look at the ladder and try and see if it's not moving too crazy, what kind of support we have at that level. How many shares are looking to be bought there, and can I get in there? Is it showing 300 or 400 or 600? So maybe I won't even get filled there. So maybe I'll put a limit order one tick above, right? And you'll see that happen a lot. And that's when that, and we'll go over this next week when we go over the ladder. So let's say at 2850, you have 300 number here, right? So you got somebody or a bunch of people looking to buy 30,000 shares at this 2850. And that's all the number you see, 20 right there. Maybe you see some below, and that's fine. But then you see instead of just 300 here, this 300 stays here, but then you see 75 pop up on this 2851. Well, that's pretty darn bullish, right? Because what that means is that these traders are wanting to get in right now. They don't want to wait until those 30,000 shares are filled before they get in. So they start putting their bids in higher than where you have that little support level there. And you just have that support because you've got 30,000 shares being bought there. So unlikely that it's going to get bought up and go back down. But once those shares are getting bought, that it's just going to continue to climb back up. So I hope that answered your question. It's very situational, and once we go over the ladder, maybe I'll get a little deeper into that, Sam. That will hopefully provide you with a little more clarity. Okay, I'm going to stop the recording here real quick and get to the rest of these questions.